Good afternoon, everybody. Still here, Daily Market Pulse, Thursday now, September 4th, and stocks and lower. We saw about a 2/10 drop in the Nasdaq and the S&P, and marginally on the Dow. Volume was lower on the Nasdaq, but higher on the New York Stock Exchange. So that adds a distribution day to the S&P 500 because it was right there at the 0.2% drop. That's the cutoff. 0.2% drop with high volume compared to the previous session is a distribution day, as a reminder. Okay, so that's where we are. Not big numbers, obviously, and at new highs originally with a little bit of a pullback, no big deal. Immediate support levels below, so and it's been fairly long. We're looking at it's August 4th, or it's been 3 weeks that we're in before we really get any distribution days to really be of significance. So I don't believe that this rally, this uptrend, is of any jeopardy of any kind. So we're looking for a dip, we're looking for support levels, and we're looking for continuation at this point until it's proven strongly otherwise. So with that said, we move on. There is the consolidation across the pivot as well as the 8 moving average for the Dow Jones. Still sitting right there at that level. 20 still rising, 50 barely rising, looking for a close crossover. We said that prices may go sideways and struggle until there's a little bit better angle or approach or even a crossover of the 20 over the 50. And that's what's happening so far. So we should be seeing a move likely here shortly into 17.2, I think to 17.3, I would imagine. Despite the sort of wavering appearance of all these candles, they look like there's some rejections. They look kind of bearish. They look a little on the neutral side, which of course neutral is fine. It's going sideways. So there's some indecision, but it's happening at a resistance area and it's profit taking, I believe, after a huge run to the upside. Volume has been kind of fluctuating back and forth between high and low from one session to the next, and mainly the higher volume on Tuesday was really because of the long weekend. People had gotten out, they weren't trading, they come back and they start trading right away because they're just eager to trade, I believe, is all that's really going on there. Okay, so that's the Dow. The S&P will have similarities, of course, sideways, holding right about 2,000 above the 8 moving average. Uh, and the polarity at 1990. So you see now you got a crossover 20 over the 50. So that now it just strengthens immediately. And now we're looking for support to hold, and we're looking for a bump into higher levels in the 2000 ranges and higher. Nasdaq, as mentioned, was down about 2/10. It's holding above the window currently at 45.50, and the 8 moving average as well. So everything right now is above the 8 moving average and holding just fine. And the channel may have to be redesigned, but essentially that's what we're looking at. Just look at the overall picture right now. 45.50, then 4,500, and the 20-day moving average are going to be your next support levels if they don't hold these levels for whatever reason. There was a divergence that was negative on the stochastics. That's why we're seeing a little bit of a fade. Depends on, now we don't know quite how deep. If they go deep, I have a feeling there could be a very quick rebound as well, as the buyers are definitely standing by looking for opportunities to get in. Okay, so then we've got the TSX coming up. There it is. You have a bear sash holding the 8 moving average as well, holding again another consolidation right across 15.5 approximately. So that's where I think it might drop to, is 15.5 would be a support area, and that's how that would work out. And of course, still room to the upside into 15.8, and probably looking at 16,000 as that big round number to negotiate later. Let's take a look at the New York Stock Exchange very quickly. This is kind of what gauges sometimes the S&P and Dow Jones as well. You can see there's still resistance across the top, just like we saw in the Dow. So those two are very similar in current configuration. So there is what we're looking at. I'm going to color that red. We have not looked at the New York Stock Exchange in, well, I haven't looked at it in quite some time, but you can see what we're looking at. But it's a cup-like formation, very steep, of course, very sharp and shallow, sharp and deep, I should say. It wasn't very rounded, very deep, but very quick. Stochastics also resetting itself at these highs at 11,100, looking for higher levels, of course, here as well. U.S. dollar, Canadian dollar, we should look at because we need to. There it is. So the original hammer off the 50 back to the 20. We thought there'd be some chop. There it was. It came back down to the 50 again. So chop, chop, chop. 50 is rising as well. So I'm assuming at some point they're going to decide what to do with this. And obviously 110 is the target above. Below that would be 107. So right now, because of the hammer and the rejection with the lower shadow yesterday, this is, that's today's candle. I would say bullish back toward 110 would be the likelihood if they can sustain more momentum through the moving averages of 109 plus. Euro has faded aggressively to the downside. There's a little bit of a positive divergence, so looking for support down below. And that could be as deep as, wow, all the way down into about 128-ish. So there's still room to the downside. It could be a quick, rapid flush. It was pretty quiet everywhere. All of a sudden, this huge candle. I don't know what happened there and why. Obviously, something occurred overseas that would certainly tell us that. And then we go to Treasuries next. So Treasuries found resistance across 140 or so, not quite 141. That was the peak that we had at the top here. Then 139 became the support down below. It's already, let's see, that's the December contract. So now we're looking at really more like 138. So the numbers have changed a little bit based on the contract that appears here. So 140 above, 139 was the original support. All the way to 138 was the next level. Then really 137 became the ultimate target. This is the one that goes all the way across. Oops. For some reason, this is acting a little weird. I'm going to go all the way across here like that. There. And then that's your support. The 50-day moving average and the blue shaded area would be the expected area. You've got a little bit of a trend line perhaps that might coincide off red candle and red candle. The greens are pretty darn close. So that's kind of what you're looking at right there as a potential support area right through there. I'm going to make that a little thicker. There we go. So you're looking at support anywhere from 138 down to 137-ish. For the treasuries, as this sells off fairly aggressively to the downside here. Japanese yen, let's see. Japanese yen looked like it was finding support as of yesterday, then essentially retesting the lows here at 95 for the time being. If it doesn't hold these levels, it's going quite a bit lower, but you can see what's happened. It's come all the way, chop, 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 hit resistance, and just faded hard back to support. So this would be a great place for it to restart and kind of its engines to go back up toward 96 as a starting point on its way back up. Well, let's see if they do. There's a little bit of a positive divergence here as well. That might, in fact, be suggesting that exact move. There is the channel for gold. It's at the bottoms. 3 consecutive lows are almost identically here to cross 1260. Room to 1280, 1285, and of course ultimately 1300 is what we're looking at where the moving averages are above. If they don't hold 1260, then you're heading to 1240. It's as simple as that. Same thing with silver. Silver holding the 19 to 1950 range in terms of support. Doesn't hold that, then you're looking at about an 1860 to 1870. Below that could be a lot deeper as well. Crude, the WTI is currently, let's see, it is the, I want to say October contract, because Treasuries is December. Current October contract for the WTI came down, as you know. Measured move wasn't quite met. It bounced all the way back to the 20. It's faded aggressively back to support 93. Bounced, and then just you see the highs are coming down, the lows are coming up. So it's really wedging quite nicely here in the last 3-4 days. Stuck below the 20 and above the 8. It still looks bullish based on the 93 support, so it's got to get over 96. Then it's got a shot to 98, and then the century mark, and then higher all the way to 104. So 103 for sure. So otherwise, it'll drop below 93, takes you to 91. Okay, let's go back to small caps, review that very quickly. Small caps, like everything else, faded. Bearish engulfing yesterday, confirmation today, but right at an expected pivot or polarity, essentially 116, correct, with room to 116, room to 115. That's where the 50 and the 20 are converging currently at the moment, and then maybe down to 114. So anywhere from 114 to 115 would be the next level of support if they do not hold and bounce off 116. Still looking for the upside through 117 and ultimately all the way to 120 to 121. And let's see what they do there, because if the markets remain bullish, as I believe, this whole right side of this cup will be formed, and you'll be looking at 121 and looking for a 121 breakout ultimately whenever that occurs. That could be another week or so from now, potentially. Could be tomorrow. No, not likely. That's not going to happen. Okay, the VIX markets are down. VIX popped a little bit. We were looking at the $12 support where the window was. It has done so on two separate occasions. It did so the day after the window was formed. It's come back today with a lower shadow and bounced into the moving averages of the 20 and the 50 right above with room to 1350, which I believe is the target right now. Maybe 1350 to 14. That's where there's a window. Let me extend that out here right there. So 1350 to 14 is the target above for now. And I will extend this one as well. And I should probably just make this red for now. I won't change the other one above just yet either. Just leave that like that. There's your target above with support across 1150 to $12. All right, that's it. I will be back tomorrow. Oh, no, actually, tomorrow's Friday. We will not be doing another recap tomorrow. We will be doing the weekly version at another time.